Interested in owning rental real estate? Have you ever wondered how it can help you on your taxes? Well, I'm going to explain that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so rental real estate is not for everyone, okay? I've got my 4 laws of rental real estate, and if you're a yes, if you check off each of those laws and you're interested in investing in rental real estate, are you aware of how it can help you on your taxes? Now, I've seen other financial professionals lay out their list on here's all the tax benefits. A lot of it's garbage, guys. But there's a few very honest, real ways that rental income can help you on your taxes. Let's get into it. The first way is depreciation. That is right. You can depreciate a certain amount of the property, create a phantom expense, a legal phantom expense on your tax return every single year based on the value of that property at the time that you purchased it, okay? So that's depreciation. It's a little bit confusing, and I'm gonna go really surfacey here, but say you bought a rental house for $100,000, okay? When you buy it and place it in service on your taxes, you get to depreciate that property over 27 and a half years. A long time, but basically you get, that equates to about a 3.6% deduction every single year on your taxes off of the rental income that you receive. So if you bought that property for $100,000, and let's say you rent it out for $750 a month, something like that, okay? Your total income, rental income for that year, assumes you had it rented all year, is $9,000. You get to write off $3,600 of that as depreciation. You get a deduction of $3,600 off of that, even though you had that $3,600 didn't leave your pocket. It wasn't cash outflow, but it is a deduction on your taxes, meaning $3,600 of that $9,000 you're going to receive tax-free. Depreciation. It's a huge benefit. I would argue the most important tax benefit when it comes to your rental real estate. Now, when you sell the rental property, you're going to have to recoup that depreciation. You're going to have to, that could come back and create some capital gains and other things for you when you sell it. But along the way, it creates a more tax efficient form of income for you through each year you own the rental property. The second way rental income is tax advantage. No FICA. That's right, that 4-letter F word. There's no FICA tax on rental income. And you might say, well, I already knew that. I know, but any earned income that you have has that FICA attached to it, okay? FICA, if you don't know, 7.65% on all of your income up to that Social Security wage limit, called 150, changes a little bit every year. I don't know when you're watching this. And then after that, 1.45%, still that's for Medicare, okay? So your employer as well, if you own a small business and you're thinking of adding rental properties for other income, your employer or you, if you own the small business, has to match that 7.65 as well. So FICA taxes, yes, it goes into paying into the Social Security system, and hopefully that should recoup or that should benefit you in some way in the future. I almost said recoup. That's certainly not going to be the case. Sorry. And pays into Medicare, okay? But your earned income, you've got to pay FICA on that. The rental income is unearned income. It's passive income. You're not going to have FICA tax attached to that net income. The third way that your rental income can be tax advantage is other deductions. And honestly, this is where a lot of other websites or YouTubers who talk about rental real estate, this is where they embellish it, okay? Because they'll talk about all these sorts of expenses that you can write off. But if it's an actual expense related to you running the property, it's not a write-off, it's a cost. It actually detracts from your return. But there are a few, and I'm going to name them, a few expenses that you are able to write off against your rental real estate that you're going to be paying for whether you are a landlord or whether you own a rental or not. One is cell phone, and a lot of people get a little overzealous here and say, oh, I'm going to write off my full cell phone bill. No, legally you can't. Legally, you can only write off the portion that you would argue is for rental activities or for that business use, but it's still something. You know, before you owned the rental property, you had to pay all of your cell phone bill, and none of it was tax deductible. Well, at least whatever portion you say this was for my rental activities, you'll be able to deduct that portion. Same thing with your internet, okay? Same thing with your internet expense. Depending on how many rentals you're managing, or if you're doing ongoing work on your computer device, whatever, you may be able to write off some of your, again, you got to allocate it between personal use and business use, but some of your internet expense, maybe even a computer, something like that. And then lastly, and this one is borderline on the edge of what I said, some folks, explain all these things that you can deduct, but really they're just expenses that detract from your return. Mileage. When you're driving to your rental or you're driving around for your rental, you should be able to deduct that mileage. Now, yes, you're spending gas, right? You're buying gas that you otherwise wouldn't if you didn't have that rental. Typically, the deduction rate, the standard mileage rate, is going to over and above compensate for the gas as well, because it also includes some depreciation of your vehicle and additional costs for your vehicle. So typically, that's accretive, that's a beneficial expense beyond what just it costs you. And then the fourth way under current tax laws that your rental real estate income can be advantageous and beneficial for your taxes is something called qualified business income deduction, the QBID, or section 199A expense. You don't need to know that, it's not on the quiz. But this is a special tax deduction as long as you qualify. I'm not going to get into all the qualifications here. I'm going to tell you work with your CFP and work with your CPA to make sure that you qualify, because this is meaningful. If you reach that safe harbor and you can qualify so that your rental income qualifies for this qualified business income deduction, QBID, then you could get up to a 20% deduction on the net income of that property. This is on your federal return. Most states, it's not, you're not eligible there, but that could be huge. Say, for example, you had $10,000 of rental income, net rental income, you'd get a deduction of another $2,000. You don't have to pay tax on $8,000. That's a significant, that's a meaningful amount. Could be even more meaningful than that depreciation that I spoke so highly of. So work with your CFP to see if that qualifies, if you qualify for it, and if not, what other areas, what ways that you can overcome it to reach that safe harbor so you're eligible for the qualified business income deduction. So rental real estate, it's not for everyone, okay? If it's right for you, you've got to be aware of these tax advantages and then work with your CPA and your CFP together. That's the big idea. They've got to collaborate with you to make sure you're getting all of the proper tax deductions and making that income as tax advantaged as possible. Plus all the other planning implications of having a rental, you're going to want to work with your CFP on that. So if you don't have a CFP on your team, you can always contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.